GM and GM, everyone. We
GM.
are live. Good morning, Derek. How are you?
Good morning. Good morning. How's everyone doing today?
Doing well,
Great
doing
to
well. So Dee's uh, head of growth here at Mode, and then we're joined with Derek. And Derek, what is your what hat are you wearing today at Steer?
I wear many hats. Currently, I lead everything over at Steer Protocol right now. And that could be on the business side, marketing, engineering, you name it. But hopefully today I'll be wearing the product role.
I love it. I love it. And so we can both jointly welcome everyone to our Mode DeFi deep dive series, where we're going to try to demystify some of these opportunities. I know it's kind of daunting when you see these high APRs or different numbers in different places, and just wondering how we get into them. But hopefully we break that down, what it means, and then we're learning about some amazing DeFi protocols along the way. So we're starting with probably one of the heaviest hitters here. With Steer, we want to get right to it, not waste anyone's time. Opportunities don't last forever. So when thinking about scheduling some of these protocols, Steer very blatantly rose right to the top. So yeah, let's get into it. Derek, if you want to share some part of your story, personalize a little bit of your journey
Sure.
into crypto, your journey into Steer, and then we'll go from there.
Sure, yeah. I started my crypto journey in 2017, building out mobile wallets. This was before we had a lot of like RPC providers and stuff like that. So everything was built in-house. We were pretty big at our peak and then got acquired into Voyager. Built out a lot of the brokerage systems over Voyager in terms of like deposit withdrawal, enterprise custody. If you were a user of Voyager, you probably used a little bit of my code, which is cool. Well done. I've also been like CTO at some big data company. I've also done like synthetics or like volatility indexes for ETH and BTC, which actually trade right now on BitConnect, which is really cool. And yeah, my current focus right now is Steer. Steer kind of was like an accumulation of multiple different problems that I saw as I was building these different companies. And one of the biggest ones is how do I just automate my life on chain, right? And the biggest thing I think for people chasing yield is is my loan to value good, or am I in range on Kim or any of the other V3 protocols? But a lot of that needs to kind of like disappear for us to get to the masses. And so Steer is trying to kind of break down those barriers so that people have easy access to yield or to different applications that kind of like automate their on-chain life.
That's awesome. As a fellow liquidity provider myself, I super appreciate your work and your thought that goes into this, because I wake up in the middle of the night thinking about ranges myself, uh, and you just kind of mentally keep track of them in the back of your head. But I know not everyone has these kind of dreams. Some say nightmares, but things like Steer can definitely help us
Exactly,
navigate those
exactly,
things.
and that's the goal. Yeah, exactly.
And so Steer so far, some milestones, some achievements, things you're proud of, things you're looking forward to, and then we
Oh
can
wow,
dive into
sure.
getting our hands dirty.
Yeah, a couple quick hitters. We are officially, I think, on about 30 chains now, which is pretty crazy. We're about a year old next month, maybe. I think maybe give or take some days, which is pretty amazing. We've been one of the fastest growing liquidity managers or automated liquidity managers, what we call ALMs, in the industry, which has also been quite amazing. We support over 28, 29 different AMMs now, and we have a pretty large pipeline of new chains coming on as well, which is pretty exciting. We just surpassed 20 million TBL. And yeah, everything seems to be hitting all-time highs at Steer. So it's been a pretty busy time. And we also have been able to also push some new features. So we just added like single asset deposits. We also have our LiFi integration, which allows people to bridge from any kind of chain that they're on to the destination chain that they're trying to go to. And we actually do some nice little like magic in the back end. So you don't have to like, input like the right numbers and stuff. Yeah, we also launched a couple new strategies. I think one of them actually is live on Kim, and we'll probably look at those. Look at that one today too.
So exciting, and congrats, by the way. It is no small feat getting to where you guys are today with the traction and the user base. And I'm sure many people appreciate it, both vocally and in the background. So yeah, let's dive in and see how we can explore some opportunities on Mode. As a
Sure,
user, if
sure.
we put our user journey user hat on, a great place that a lot of people go is Merkle, where people distribute rewards and opportunities. So perhaps we can start our opportunity journey at Merkle and kind of investigate, maybe filter to the Mode chain and see what's there. And then I think it'll be very apparent how we kind of dive in.
Yeah. So this is the current dashboard of Merkle. We can actually go a little bit further. Here we go, Merkle.angle.money. And this is fairly nice. So you can see all the different opportunities for APR in terms of providing liquidity across multiple different chains. So the first thing that we need to do though is go to Mode because Mode has some really good opportunities. And then basically this will list all of the live strategies, the current APR boost for those strategies, and then you can also see, what are the different APRs for the different providers. So it's got a fair share of detailed information. You can go into them as well. You can kind of see, okay, like what were the past rewards, what are the current rewards that are live, and what are the daily rewards. From there, there's also some options of like how you could maybe enter these vaults. One of them would be through like the KP NFT, if you guys are familiar with that. Another one would be through Steer. There's also Kim, right? And then the Nitro Vaults, if you're familiar with the Nitro Vaults from Camelot. Um, so yeah, those are just the first kind of steps to try and getting into figuring out what you might want to LP into. The biggest one is to kind of look at, where's the TVL? TVL and incentives kind of play hand in hand in terms of what the APR ends up being. So if you see a high APR and a low TVL, that might be something that might be juicy. Whereas if you have like a low APR and a high TVL, then that means that might be a little bit more saturated. But all of these are providing, I would say, pretty good APRs right now.
That's awesome. And Fede, I don't know if you're in the background hitting some levers here, but are we live on the screen share? I think it's just we're still in dual mode here. Okay, awesome. There we
Oh,
are. There is
awesome.
some
Yeah, let me go
color.
back through that then. We have a couple more seconds. So here's basically Angle, it's a website Merkle, and what you want to do first is go into chains. And once you go to chains, you can check out Mode, and this basically shows you the opportunities that are currently present across Merkle's opportunities, and that's mainly on Kim. And you can basically view what are the current APRs, and then if you had a KP NFT, I guess you'd be getting 85% APR. That also comes out of Steer, so it's kind of handy. But if you click into one of these pools, which I accidentally just did, you can kind of view the different ways you can get access to this yield, and all of them are supported basically by Merkle. One of the really nice things about Merkle is that basically when you deposit into Steer, for instance, or on Kim, which we do that now. So if I open this up on Kim, I could create a position. Let's just say it's Kim mode, and you'll notice that it's already selecting the strategy. If I were to add this, I don't have any of these assets right now, but if I did, then basically I would be locking up my steer position, and that allows me to get my KP NFT. There's other ways to also LP where you would create a position which doesn't go through the KP NFTs, and at that point you would maybe just select the pair that you would want. So maybe, for instance, Kim USDC and then auto. So there's two different options here, and this is kind of where the value of steer kind of comes into play. But when you're providing liquidity through Merkle to gain these rewards, you have two options. You can manually set your positions and your liquidity, which basically would mean that you would say, okay, well maybe I want to do 3% up and 6% down, and something like, or maybe I'll do a wider strategy, and we can talk about what that means in a second. But this is something where every day you might need to come in and update, and then there's the automatic strategies, and if there's one available, then it basically allows you to kind of set it and forget it, which is really nice. So this would be steer, and so you can kind of see what the strategy looks like, a little bit of details of what the strategy is, a visual. You can dive into more information, so you can actually open up the steer vault itself, and get the PAPR total TPO. So this is really handy, but this is more of the set it and forget it style strategy versus what you do over here with manual. But both will get the Merkle rewards.
That is awesome. That is awesome. So let's go to, I guess we can start with Kim. We go back to that Kim page. So what do these bars mean? It kind of looks like a little
Sure.
city.
Sure,
So if
yeah.
someone is
Let's
looking
talk.
at this for the first time, what do these mean?
That's a great question. So let me pick a pair that exists. So give me 1 second. Cool. So these bars are actually where the liquidity in the pool is. So if you're a trader, and we'll just open up another tab here and maybe just switch over to it for a second. But if you're a trader and you're trying to do a trade, depending on how much liquidity is in the pool, that will determine the amount of price impact, right? And the price impact is determined by where liquidity is. So let's say you're a buyer or a seller, you need to go find a buyer and a seller. Well, as a liquidity provider on V4 liquidity, you can choose where you place that liquidity, and that kind of determines how narrow you are, but also how close to the current price you're setting. And if you're not in range, then you don't really collect fees, and if you are in range, then you do. So the goal is basically to always be in range, and that's what Steer's platform is kind of built for. But these basically show you the liquidity. So let's say we were to keep buying, and the price was actually here, and someone were to keep buying. At this point, there's less liquidity, and so when we would do a swap, the actual price impact would most likely double or triple, just because it's a much weaker area for traders.
Awesome. So when I'm looking to set this range, it says narrow, common,
Yeah.
wide, full. So we can kind
So
of
I can
see it adjust there when we go through.
Yeah, so I can kind of talk about what those mean. So narrow basically is saying I want to be as close to the price as possible. And what happens is when you deposit, you'll most likely deposit a 50-50 ratio. That's not always true, but you'll say, okay, I have $10 of Kim and I have $10 of USDC. I'm going to put them into the pool. Well, if someone's buying, right, let's say Kim, then you're going to be giving away your Kim and you'll be receiving USDC from them, right? So then you kind of don't have 50-50. And that's just something to note. So the more narrow you are, the faster that exchange happens, and the wider you are, the slower that exchange happens. And what people kind of have come to kind of label this is called impermanent loss, where you're sitting there holding two assets, and maybe one's moving, and you're receiving that asset. It's a little bit more complex topic, but yes, exactly what you were saying.
So why do people, I mean, I don't want to go out of range, right? So why don't I want to have a really wide range. So
That's right.
not to go out of range. Uh, but why would I want a smaller range versus a wider range? Personally.
Yeah, that's a good question too. So smaller ranges basically mean that your deposit is more capital efficient within that market, and what that also means is that you're increasing the amount of fees which you would generate. Right. So let's say we have a pool that's doing 10% APR, right? And we place our liquidity what's called full width. Full width is very large. It's 0 to infinity. So basically, you'll never be out of range when you're full width. Um, in that sense, you're always basically fine. If you go into wide, um, then basically you won't occur those issues if you go out of range, or you will occur those issues if you go out of range, but just less. So it takes more liquidity or more price movement to kind of have those problems. The tighter you are, though, because everyone else is spread out less, right? Let's say if you're in a wide position, you're spreading your liquidity more across the price range. But if you're tighter, then you're kind of saying, okay, I'm definitely want to make sure that I'm making as much as I can possible in this range. This is really good actually for stables, like kind pairs. Narrow ranges can actually do pretty good, and I can show some examples where we do something called multi-position liquidity, where instead of just having one position, where right now we have like a min price and a max price, we actually cut up that price range into multiple pieces, and then maybe we'll curve the liquidity around the price, which is a little bit more complex. But the more narrow you are, the more fees you get. The less narrow you are, the less fees you get.
Awesome, awesome explanation. So it sounds like if I go really narrow here, then I'm earning more, but I'll also maybe have to adjust my position more because I'll be out of range. When I'm out of range, I am not earning any fees whatsoever.
That's
So
correct.
that is kind of the conundrum that we have here. And I love this explanation and going through this in this minute detail because it's a lot to take in. It's somewhat of a headache, hence why people like yourself have built something um, that can take all of that away. So now that we've gone from the context that we just went from of adjusting ranges and things like that, what are we looking at here? What are the bars, the
Yeah,
light bars, the
yeah.
horizontal,
Uh,
all of that?
Yep. So steered is something called an ALM, which we'd call that an automated liquidity manager, right? So you have that liquidity that you wanted to deposit. Maybe you want to automate that. Maybe going in and doing a manual adjustment is kind of tough, right? So what Steer does is they provide strategies, and I'm gonna actually just open one up on our site here. And this strategy basically will go around the current price, right? And the green basically is the liquidity profile, and the purple is basically our position. And this will automate the strategy or automate your liquidity for you, and you can kind of view like what are the price ranges that we've set, what's the configuration for the pool, and we also have some interesting information of like historically, where were the positions. So you can see here that on Friday, between Friday and Saturday, we did one, two, three, four. I mean, we did maybe 4 or 5 different rebalances. I think maybe Saturday to Sunday was a little bit more aggressive. And so this is basically looking at the markets, trying to see, okay, maybe should I update? Should I not update? We have one thing about Steers. We have one of the largest LP strategy libraries out there. So when you go to Steer, there's usually a fair share of strategies to choose from if you're looking to set something up around a pool. But this one currently is using something called our classic rebalance strategy. And that's what we're looking at on the Kim site. That allows us to do a couple different things. It has something called rebalance triggers, which kind of determines, if the price moves a certain amount, or maybe if it moves only in a certain direction, there's different settings there. Or maybe do we want to curve the liquidity or not curve the liquidity? And that's also an option. So this is one of our most versatile strategies, and honestly, probably at this point, the most used strategy across our platform. One thing to note is we do run 1,600 concurrent vaults right now on with these smart pool strategies. So it's pretty heavily used.
That's awesome. Do we have a perhaps another pair that shows a couple other strategies? I know
Yeah, yeah.
as I'm
Let's show this off maybe through the steer site, just because we're going to get a little bit better graphics. But yeah, one thing you'll note is we actually run multiple strategies, and if it surpasses basically $50, it shows up for as a public pool, and you can actually see the strategies that are present. You can actually hover over, view the width, and if you hover over the APR, you can also see like what's the base APR, is there staking rewards, are there Merkle rewards, and stuff like that. You can also denote if there's farming available, if there's a little farmer. And right, for instance, right now we're doing 40% APR, really, really good. But then there's an additional 9% sitting there for people to pick it up. The cool thing also on this is that we also have multiple strategies running. And I'm going to talk about these real quick. One is our classic rebalance strategy. It's the one we just discussed. The next one is the elastic expansion strategy. That one uses historical data, whereas classic rebalance uses the current price, spot price. Elastic expansion actually uses historical data, so you can look back in time, do simple moving averages, really more complex algorithmic stuff, and that's what that uses. But it uses Bollinger Bands as its base, and then fluid liquidity strategies are newest, and I'm going to click into that one just because it's also kind of one of the more interesting ones. Right now, we're one of the primary, not primary markets, but our strategy basically looks like this. There's 3 different positions. There's a base position, a limit position, and then there's a much wider sell position. And this is one of our most complex strategies. But what it ends up looking like is a little bit something like this, where the color of the box is kind of like the density. But this is something that you would never do on Kim, right? This is something that's way too complex, and honestly, you'd be managing way too many variables to probably do it manually. But this does really, really well. It's doing 26% base APR, and the fluid liquidity strategy is it's attempting to reduce the amount of IL. Remember, we were talking about the IL, or the impermanent loss, earlier. Its goal is basically to reduce that. This vault's maybe been around for maybe 3 weeks, and yeah, it's performing extremely well. So another thing you can do is you can look at like maybe what the historical positions are, but like how did it fare in regards to market price? And you'll notice that, as these 2 different assets, so this would be token zero would be WETH, token purple would be USDC. As these like markets are changing, how are we faring on the price of the actual LP token? And you'll notice that it actually is still trending upwards despite the negative downturns for both of these markets. So that's pretty cool. You can also look at the market analysis. There's a bunch of maybe a little bit too much data here, and then you can also get into fees and what it looks like for how many people are depositing and stuff like that. So this is a really cool view. This is our analytics section, but generally, people don't really need to know too much. They just need to know what's the APR, is it doing well, have there been losses, stuff like that.
Awesome. So when comparing the strategies, what would you think? What would you say the best tab is to compare that? Would it be those comparisons of the LP versus the underlying assets? Maybe
Yeah.
we could look at each one of these and kind of get a high level napkin kind of assessment on how
Mm, mm,
to
mm.
compare these.
Sure, sure. Yeah, I mean, each one's going to do a little bit differently, I will say. So we can look at this one's pool analysis. This one's trending upwards. This one's built to do that. This one also seems to be doing pretty well. And so what you can do is you're basically looking at what's the percent change over the past couple days. So this is looking basically since the 14th. If we look at all the prices, and this also, so this one's basically done about 2% gain, which is kind of cool. Over the past week, this one's done 1.5. It got to two, but then pumped down. And this one's gonna be a little bit less, but should be positive, and that's just over one. So this one's a little bit wider. You'll notice this is a 75% width to it. So in regards to where the price is, right, this is a very wide strategy. Whereas if we look at this one, it only has 7% around the current price. And this one, well, this is a fluid liquidity, so it's a little bit different, but this was 61%. Um, the wider you go, the less IL, and that means that you won't see these dips in the LP share change. So that's the goal, is to try and reduce the volatility on that orange line.
And by reduced volatility, you mean not
Oh,
so many
sorry,
squiggles.
not so many squiggles. Yeah, just not as just don't go up and down as often, and be more steady basically in a certain direction, which you kind of see through the fluid liquidity strategy.
Awesome. So at this point, if I'm a normie that's tuning in, I'm like, oh my gosh, I'm glazing over. I don't know what's going on. There's so many things. Just
Yeah.
as a little kind of checkpoint in all of this, why would I want to provide liquidity versus just holding an asset? And it doesn't
That's
have
a
to
really
be
good
kind of
question.
a math necessarily answer, but
Yeah,
maybe
yeah.
a little bit of math combined with a little bit of human behavior, perhaps. But why
Sure.
why
Yeah.
should people, yeah, consider liquidity positions over just holding and praying or waiting for a
Sure.
certain event?
Yeah. I think there's a couple of different reasons why you'd want to do it, and we can kind of go through them. The first one is kind of understanding how an AMM works, and kind of like where the incentives are for people to get involved, right? That's, I think, the first thing. And that's kind of like the base of DeFi, right? So if you're doing a swap, there's always a fee. And that kind of determines, that's dependent based on the pool that you're going to be trading against. But the biggest thing to know, right, is that there's always going to be a fee. The fee actually goes to the liquidity providers, the LPs. So those are people who took that $10 CAM or $10 USDC as an example, right, and deposit it whenever there's a swap. Let's say it's a dollar. Maybe they're taking a penny out, right? And that's the LP fee. Well, it's going to be that penny gets divvied up against everybody. So if you deposit your assets as an LP, you're actually getting the trading fees, right? So if you're Coinbase, right, or Binance or something like that, there's trading fees there. Binance gets those trading fees. For AMMs, the trading fees actually go to the liquidity providers. So if you think that Binance and Coinbase have really good business models, then being an LP would kind of align you probably there. There's other ways you can. The second way you might want to why you might want to be an LP is that you're saying, hey, look, I want to sell my assets if it hits a certain price. This is similar to a limit order, not the same. It's called a range order. It's a little bit more complex, but the biggest goal of why someone would want an LP is you're trying to basically attach yourself to the fee revenue that's coming off of an AMM.
That's awesome. That's awesome. So to share a personal journey of mine, I used to hold assets and then try to speculate, but the market is just very hard to time. And it is fascinating that these creating an LP can generate fees no matter which way the market is going. Um, but it's odd, right? Because these APRs are all over the place. If we go to maybe back to Merkle or any of these screens, to be honest, uh, I can sometimes feel glazed over again when I'm seeing these APRs. It looks like a meme. It's like there's no way that's real. It can't be sustained. I check
Mm,
this site, every other day. One time it's 5%. The other time it's like 100%.
mm.
Can we dive into kind of what's going on there? Like, why are these APR percentages all over the place, and why should I maybe not be worried about such fluctuations?
Oh, sure. Yeah. So AP, the first thing to understand is how APRs are calculated. It's very dependent on TVL. So if there's $100 LP'd, right, and maybe there's $10 that were traded, and so off the last example we did, we have 10 pennies that we now need to go divvy out. Well, as more people deposit, so we had the $100 deposit as LPs. Well, if it's 200, we still have those 10 pennies. So that's kind of tough, right? That means the APR will go down. So as people deposit and withdraw into these yield farms or into these LP strategies, it basically will ebb and flow what the APR will be. So that's kind of just like one of the things is just that you find. And so what you really want to do is kind of look at what's the average APR, like over time, over the past 7 days, past week, past day. What is like the average, and that's really helpful. So you don't really have to find yourself at the whim of the fluctuating APRs. The second one to be very cognizant of is the APR rate. And I'm going to just talk about this for a second because it is probably one of the most important things to take away, most likely from the conversation. So what you'll notice here, even on the Steer website, right, is the classic rebalance strategy is doing 6.7, and the fluid liquidity strategy is doing 6.2. These are wide strategies. And honestly, for me, I like wide strategies. Wide strategies means it's low risk. Wide strategies, still, there's always risk, but it's just less, right? And I just know that I can kind of set it and probably things are going to be great. But if I go narrow, you'll notice that it's actually at 54% APR. And the reason for that, right, was because the narrower we go, the more fees that we generate, the wider we go, the safer we are, right, from IL, but the less fees we get. And so if you're a user, you're kind of looking at these and saying, okay, well, what is the core APR, and then what is the APR that's coming off of the strategy itself, and that right there will really be the biggest thing that you'll want to look at. But anything at 9%, is pretty good. If you're hitting something like 100%, that's mainly because of incentives, and you can kind of see that there's $250 going as daily rewards. So that right there is just a boosted thing. Now, in a week or two, this could end. You'd have to click in and see how long the campaign will be running for. 5 days left, right? So it's a great time to get in. Maybe, I don't know. We'll see. But yeah, this will lower down probably as they maybe roll into a new program. One thing to note, just real quick, right, is that let's say you LP into Kim mode. No one really wants to look at Merkle all the time. No one wants to go to Kim and manage their LPs all the time. No one wants to go to really Steer and manage it all the time, right? So it's kind of you're trying to get this situation where you deposit and don't really have to think about it. What's nice about Merkle is that some of the AMMs do back-to-back campaigns. Kim has done that. I'm not saying they're going to keep doing it. That's up to them. But you'll notice that there's one 19 days ago, 3 days ago, 5 days ago, and it just means that basically the longer you LP, hopefully there's campaigns that hit and will kind of boost your rewards. There's nothing you have to do as a user to receive Merkle rewards. So there's no like second action. So if you deposit into Kim, deposit into Steer, do the KP NFT, go crazy on it, right? There's no action where you'd have to stake your assets. They'll always be available in your wallet, self custody. That's the biggest thing that Merkle unlocks, is that you don't have to go give up your assets to some other smart contract. To claim them, you would just go to your account on here and claim your rewards. Nice.
That is great. Yeah, great opportunities. Just to stop you here, Derek, do you know if we're on for 30 minutes or an hour? And that will direct kind of my next
Mhm. We're on as long
questions
as you
here.
want. We're on as long as you want. We can do an hour, or we can get it here. It's up to you, or we can go in the middle for you.
Awesome, awesome. Yeah, if you got time, let's keep rolling. Let's keep rolling. For sure.
Awesome.
So, yeah, I just like breaking this down because I'm just imagining my early days in DeFi and trying to, look at this and decipher what's going on. So what you've mentioned is the APRs are greatly fluctuating, and maybe I should be looking at a long time average to really make my decision of where I should go. And then it seems that I should also take incentives into play. So are there rewards coming from somewhere else that are maybe affecting this APR? And then how is TVL look compared to the APR? So it seems like the more TVL, the more steady maybe, and if it's very small, that might skew it towards rates that might be unreasonable.
Yeah, and you can
So
actually just real quick, you can actually see this right here, right, where you have daily rewards are the same, right? But the TVL is different, and therefore the APR for the larger TVL would be less, right? Just going back to our example that we were just talking about.
nice, nice. That makes total sense. So why would what is the kind of advantage of holding an LP for a very long time frame versus a shorter time frame? Are there
Mm,
anything to consider there, or why would I want to consider longer time frames versus kind of in and out?
sure. I think in and out is potentially problematic for some people just because you have to think about the amount of fees that you paid on chain. How much did it take to maybe bridge, right? There's incurred costs before you actually get into the strategy, and how long will it take to maybe recoup that? Sometimes with incentives, that's faster than others, but usually you're looking to place your liquidity for a longer time. Those would mean you'd go into wider strategies. If you're someone who's looking for short-term gains, right, and you're thinking, oh, the market's going to range, I think the strategy is going to do well, then that's more of a short-term play. So for me, when I look at things, this is how I do it: is if I see a wide, I say, okay, that's more of a longer-term play, and if I see something that's more narrow, then I know, okay, maybe this is a couple days or a week or something like that that I might deposit into.
Gotcha. And I would add that on some charts, I don't know if you have one handy, but showing charts of where the fees are captured on some of these V3 positions, and you'll see huge spikes in fees. And so I would say a lot of the
Mm.
returns are actually from just short little movements of market volatility. So when we have huge swings in the market, oh, you're pulling up revert, my favorite, my
Oh,
favorite.
it's just a good spot to just get the these are weird tokens. Let me see if I can find one that's normal. Sorry guys. But yeah, the goal here is that this is a really great website. Let me see. Let me just pick one. What's really nice about Revert is they do have charts. Nah, this is bad pool. Sorry guys. Let me watch me fumble for a few minutes.
No, this is part of DeFi. This is why I love the live stream. Is hopefully people are not intimidated.
Okay, so here's a LP that I'm loading up. This is Revert Finance, very cool, specifically designed for analytics around V3 liquidity. And so we're going to use them for a second here, but you can kind of see, where is it? The volume is where basically the fees are generated, and fees are generated sometimes in times of volatility, right? And that's kind of where you want to be an LP. But this is kind of, geez, this is what you're kind of getting at, correct? This right here.
It's funny. This is the exact screen in my mind on that little monologue. Was these
Yeah.
these kind of spikes?
Yeah, I'm trying to maybe pull up more days to see if we can show it better. But I mean, you can kind of think of that, right? So like if there's a day that there's like maybe a lot of price movement, that means a lot of people are buying and selling, right? And that means a large amount of money is being bought and sold. Whereas maybe if it's a calm day, right, there won't be as much fees generated, right? So if you're jumping into a pool and you're like, oh man, for instance, for steer, we do 7 day average APRs, right? So if you jump in for 2 days, it's like, well, maybe that day there wasn't really any volume, so it's really good to go long term because you're looking to capture the peaks of volume, and this goes for basically every single pool out there.
That's perfect. That's exactly what we're getting at. So, the longer we're exposed, the higher chance that we have to capture these really high volume days. It's kind of I kind of explain it to some of my friends that it's like running an ATM, right? So if there's a conference or something in town that's going to get a lot of foot
Mm,
traffic on the sidewalk, you're going to generate a lot of those fees where people are going in and out of the ATM. And then
very well
versus
said.
the off season, you don't want to run that. Now, does that do ATM providers come and load up all their ATMs during the summer, or do they leave them out year round? So it's kind of just um, yeah, it's being an LP provider is a little bit of yeah, it's an ongoing consideration, I should say.
Yeah, but I will say it is the backbone of DeFi, right? I mean, it's that and then providing, your assets on like lending protocols, but either it's swapping or lending, and those are the two things that keep the engine going. So it's nice that I think at least for at least in DeFi, right, that people have access to even get close to the trading fees, right? Because you don't see that at centralized exchanges, you don't see that over, with the traditional finance. So it's a unique opportunity. Which is amazing.
It is. It's beautiful, and it's where the real yield comes from. It's real demand. It's people moving in and out, and so
Yep.
whenever you see the
Yep.
the meme comments on Twitter, well, where does the yield come from? Well, this is about as real and raw as it gets.
Yeah, yeah, yeah. This is about as big as it gets. Yeah, and if you look at like some of the larger protocols in the space, right, like Uniswap, right? Why are they so big? Right, it's because they provide this for everybody.
Yes,
Awesome.
I definitely Revert is on my on a short list to get to mode as soon as we have the integration. I would be happy
Sure.
as a clam
Yeah,
to have that
they're a good
connectivity.
team. Yeah, good team. Mario over there is a fantastic founder. So yeah, definitely connect with them.
Um, so yeah, let's go back into steer for those that are still with us
Yeah,
or just joining us.
I can
Um,
show a couple cool things that are maybe more user friendly for people. Sometimes there might be, let's just search the Kim token, for instance, right? Sometimes there are pools which we don't support, right? And that can kind of put you in a pickle where you're like, well, I would love to LP on Kim, but I'm unable to, right? So what we have is something called Deploy Smart Pool. And what that does is it brings up a quick mode. Quick mode is basically the most simple strategy you can get, and what it allows you to do is pick a rebalance schedule, a initial amount of gas, and then what the width around the current price is. Um, I think I'm having a couple of internet connection issues, but what happens is, let me do it here then. You can do quick mode basically for any pool. Uh, Let me restart. But what's nice about it is basically you can set up a pool for any market, and it only takes about 30 seconds. Okay, so we do basically 4 hour, maybe the initial gas, we do 25 runs, and then we can do maybe 10% or 25%. Oh, darn. Okay, well, I won't force it, but I think I'm getting rate limited on some API right now, sadly. There's another way to get involved, which is through a more advanced flow, which is this, where again, you can also kind of search, maybe like the Kim token, for instance, and view the pools. And then from there, get access to our strategy library. So this is much larger library of strategies, but allow for you to do more custom things. So you'll find a classic rebalance strategy here. I'm going to open this up. This is going to look extremely technical, but you'll see that there's a bunch of different options. You can provide your liquidity only in Kim or only in WETH. Maybe there's different ways you want to rebalance your liquidity. Maybe there's a different custom liquidity shape out there that you might want to apply. All of these are kind of like very advanced tooling, but it goes to show basically is that Steers is the only ALM out there basically that has an open marketplace for strategies. Anyone can build a strategy. If you do, there's a fee share that goes into that, which is just really awesome. So you can do 33% rev share there, and then yeah, anyone can access it, and the quick pool is about as easy as it gets because you just need to tell us, how wide do you want your strategy, and how often you want it to run. And I wish it was running. Maybe I can go to a different chain real quick and show off.
and when you're picking runs, how does that? What are we
Mm,
doing? Is there a quick math on that with my length and
sure.
my
I
runs?
apologize. There
No
is. I
worries.
apologize.
That's
I
why
should have
we're
answered
here.
that.
That's
Yeah.
why we're here.
So
Let's.
for the runs, so this is it running. Sorry, guys. For the runs, basically what that says is okay, for every 6 hours, I want to rebalance my liquidity, right? So that would mean every 6 hours, I need to do a transaction on chain to go do the rebalance. Now you don't have to think about that, right? The nodes and the strategy will, right? But do you have that? You're like, okay, well, 4 times a day, right? Well, then 4 times a day, 10 runs, right? That starts you. So yes, that is the math. But if you want to do 100 runs, maybe do it for 100 days, it would look like this, and you would maybe do like a 25% range or something like that. Or maybe you think that that's too wide, so you want to go more narrow. From there, though, you can basically just provide your assets. You also can swap and deposit, and from there, you're kind of off to the races. And then once you do that, anyone can kind of join your pool, which is also kind of cool. So every pool shows up here if it surpasses $50. And then we have like single asset deposit, which is available, or people just kind of deposit with 2 assets, which also still fine. Merkle is also integrated. So if you don't want to go use the Merkle site, you just kind of want to go search for Merkle stuff, but do it on Steer and then, basically have that all there. We have that natively integrated. So you don't have to go chase multiple different UIs. We have built-in bridging through the swap, which is also helpful. So yeah, a lot of features basically to help you get onboarded. And if you are looking to maybe get into a pool, which we don't support, I highly suggest trying the quick mode. We usually do it in under 30 seconds, and it's pretty brainless. So it's quite nice.
That's awesome. That is awesome. So people can come in here and perhaps experiment, and then if they create a pool that other people use, there's a rev fee share. Can we
That's correct.
explore that a little bit?
Yeah, I can. This is going to be a little bit technical, so bear with me here. But if anyone is a developer listening and you're like, hey, that sounds really interesting to me, please check out our docs.seer.finance. You can go build a strategy. And what this basically allows anyone to go build a strategy in any language that they want. This is built on top of our protocol, which does a lot of other things other than just liquidity management. But right today, we're talking about liquidity management. So what you can do though is you can build it in any language. That could be TypeScript, Python, Go, Rust, whatever you really want to do. And all of the strategies that we were looking at, that classic rebalance, the fluid liquidity strategy, the all of them, right? They all are built with our SDK. This allows anyone to build with the same kind of tools that we use internally, and we just kind of basically make everything public, which is really cool. So you can build your own strategy, write your own tests. If you want to, you can even back test that strategy against those markets and kind of see, okay, when does it fail? When is it doing good? Again, same tooling that we use internally. You can test against any pool on any chain, any time frame, and so it's also really really cool. So this is available. You can run it in the browser. If you get past all of those hurdles though and build yourself a strategy, when you launch it, we do 15% performance fee on all the vaults. And we split that in 3 different ways. 5% of that goes, sorry, 33%, right? But 5% goes to Steer, 5% goes to the person who built the strategy, and then 5% goes to the nodes that are operating the execution of the strategy. And so if you're a strategist, it's kind of interesting because there's a 33% fee that you could be taking out of that 15% that's applied to everything. So let's say you are a creator of static stable strategy V2, and there's 12 pools deployed for it. That means you're now getting that fee split off of 12 pools. This one's doing fee split of 31, stuff like that. So it's really nice to see that multiplier happen. And when you deploy it on one chain, you can also carry that strategy to other chains as well. And so it's got a nice multiplier effect.
Amazing.
Extremely advanced, right? This would be for developers who are sitting here and they're like, oh wow, that sounds very very interesting. And when I talked earlier about what does Steer do, right? Our goal, right, is with all this tooling, let's build strategies, vaults, apps that basically automates our lives away, so we can spend time doing fun things.
Yes, well, it is a deep dive, so I'm glad we got into that for sure. So how would I? So when we scroll down a little bit, there is. When we get down to deploy smart pool. So what's going on here?
Yeah. Oh no.
Yeah, we can find somewhere else to demo.
Yeah, 1 second. So deploy smart pool is quick mode, right? So what we're showing on this page will be the top 10 pairs for the AMM, and then any other pools that we also have. So it'll be the top 10 plus others, right? And so what this is basically saying is, hey, there's and honestly, that's bad for us. We should have one already, but it's basically saying, hey, out of the top 10 pairs, there must be one that you're not supporting. And right now, there's been $13 million of cumulative volume. So it might be a good idea to deploy one, basically. And so from here, we kind of can start picking up our stuff, set up the strategy, say I want to do 25%, hit deposit, and oh, maybe you'll let us do it this time. Hit deposit, and then from there, you can kind of go from there. Sorry, guys, I don't know why it's breaking, but from there, basically, you can set up the pool, and what will happen is you'll end up with a strategy that looks like this, that you would be the deployer for, which is kind of cool. And then anyone can deposit, yourself or others. You basically get a screen that looks like this, and you can kind of track the fees, use the analytics. But if you're looking at a pool where it says, "Oh wow, that's interesting," it means that basically there's no smart pool there, and you could be the first.
And so if I'm the first and I deploy there and I'm sponsoring, 100 runs, does that mean I'm earning fees? Or how does that
You
work?
are,
Anyone
yeah,
can
yeah.
join me?
Anyone can join you. It doesn't really discount any of your fees. You're always going to probably make the same fees that you were going to, which is kind of nice. But yeah, anyone can join you basically. So that's what we call creator strategies. So we have something called verified vaults. That's a great actually point that I should bring up. There's something called verified vaults, and there's things that are called non-verified vaults. And a verified vault is anybody who's basically has published out multiple strategies that have done well and basically are verified, right? They're just that they're do well. And then there's situations where you have non-verified vaults, and those would be vaults. Let me go to let me go to another chain where there might be some. Non-verified vaults are what we call creator vaults, and those are vaults that were maybe created by other people. So if I go to like uh, this one, you'll notice that these don't have the verified tags, but were deployed by users of the platform who wanted to basically use one of our strategies. So this one was using a classic expansion, someone was using classic rebalance, algebra channel multiplier. So these are all just old creator vaults that people use. So we usually hide those because those are what we kind of call like dust. But if you're a user, then your strategy might be in there because you'd be probably sub $50. If you were to deposit more than $50, then it does show up as an active smart pool, and then anyone else can kind of find it and get involved, which is kind of cool.
That is awesome. That is awesome. So people can start staking their claim. So how do I get verified? How is there a minimum threshold? How do I become a
uh,
steer superstar?
Yeah, just come over to our Discord, get involved, set up some pools, let us know about them. Let's see how they run. If they're doing great and you know how to use the platform well, then by all means, come one, come all. We'd love to have you. But the first step would probably be come to our Discord, come meet the team, get involved. You'll probably be most likely running our back tester and starting to get more involved, and so you'll want some hands-on help. And we're here for you when that happens.
Man, that is exciting. Yeah, so there's a human touch to it. So any of our DeFi curious out there who want to dive in, um, we'll
Yes,
definitely
yeah.
send them
There's a
send them
couple
to the Discord.
people. Yeah, a couple people and a couple teams currently building strategies on top of Steer, and so you won't be alone in that.
That's awesome. Well, I don't see any questions in the live stream chat or anything. I know I've toured a lot of this. Anything else that you that we haven't necessarily covered, or maybe if we take a moment and put
Hmm.
our user hat on again. I think we're nerding out quite a bit right now. Um,
Sure, sure.
or even Fede. Fede, you're a pretty great observer in these situations. Anything that comes to mind that we should cover that maybe was a little murky? We'll wait for him to type here if he's still with us. Okay, yes, great point.
Oh, sure. Yeah, we can
Security
go
wise,
security.
yeah.
Yeah, let's do it. So on each, let's just talk about what's on the page. So on your vault page, even if you deploy one, you'll notice that basically there's security and audits. We've gone through multiple different audits. They're all available on our doc site, so definitely check that out. But also available here. And in regards to how we actually execute the strategies, there's a couple different levels of security. Number one is all the data that we do is deterministic data, so basically, that has to be correct across all of our nodes, which brings up the second point, which is that we run multiple nodes to come to consensus. That's something that allows us to use both off-chain and on-chain data, which is what makes Steer's strategies some of the best in the industry right now. And so that also means that the execution of the strategies, because there's multiple nodes running them at the same time to come to consensus, also need to have deterministic outputs there as well. So that's all basically done through multi-party compute, and that then comes to our orchestrator contract, and we execute on chain. But let's say the nodes were to go haywire. There's also additional mechanisms on chain that say, okay, here's the max amount of slippage that we're going to allow for the strategy. Here's the max deviation between what we calculated off chain versus on chain of the current price of the pool. There's all these other little security mechanisms that sit basically during within that area, and yeah, and we also are starting to invest in some real time monitoring solutions as well, which will help protect the system.
It's awesome. Fede loves it. We're getting the thumbs up from the backstage here.
I will say we're one of the only. I mean, I will say that some ALMs, I'm not. There's no names to name, but some ALMs and some protocols, run automations through EOAs or single private keys, and that's what you've seen in the past through a lot of the hacks or the bridge hacks. Is like, oh my goodness, what happened here? And so what Steer prides ourselves on is running multiple nodes and making sure that whatever we do on chain is validated, multiple times through multiple nodes to make sure that we do the right action on chain.
Awesome. Awesome.
But great question though. Always good to talk security. Most important part.
Yeah, these are great. So I guess to go back into the crux of looking for opportunities. So we're looking at these things here to kind of wrap this up and hopefully leave people at a place where they feel empowered and feel
Sure.
like they can get into this
I
stuff.
would like to point out some gems here, if you don't mind. Um,
Please, please.
yeah. So one thing to look at is we talked a lot about APRs, right? We talked about pools, but also like what are different types of markets, right? And one thing you'll note right here is it's easy WETH or easy ETH WETH, right? Which means it's two types of ETH, right? Which would mean then that it's most likely kind of like a pegged pair, right? Whereas like ETH USDC would not be pegged, right? That means that if you're depositing the ETH, if you're trying to hold ETH, but you also don't want to worry about IL, right? You want an IL reduced environment, then the Easy ETH WETH will actually do you an additional 2.8% APR this past week. So that's actually kind of cool for just holding ETH. If you were just to hold stables, that's even cooler, apparently, because that was doing on average 16.25% APR for your stables the past week. So these are areas where right here again, WETH wrapped WRS ETH, sorry guys, would also give you 6% base APR, but then it's getting a boost of 16% Merkle. So I really like looking at pairs sometimes when that are similar pairings, which are called pegged assets, where the IL is reduced. And honestly, Steer strategies do fairly well in those. So to hold stables and do 16% APR is unheard of, right? So these are some really nice gems that are just sitting here, and something to think about when you're LPing.
Awesome. And then concentrated liquidity, another thing that when I'm providing it with not a managed protocol, the fees are sitting on the side and I have to go collect them. With Steer, what's
Mm,
going on with these fees? Are they
that's
being, is it
that's a
auto
really good question.
compounding or what's going on?
Auto compounding. Yeah, so it auto compounds. So let's say I'm an easy ETH WEP. Right now, we're auto compounding every rebalance. So if I look at the historical rebalances, there's a compound here, there was a compound here, and that allows us basically to push the fees right back in. Very, very helpful to boosting APRs as well. And you don't pull the fees like you would a normal LP. Instead, the fees are then accrued inside that LP token you have. So you would actually hit withdraw, and when you withdraw is when you would actually accrue the amounts.
That's awesome. That sounds great to me. Anytime there's auto compounding. So if I were to come into
Mhm.
Steer, what should I come in? Should I be thinking about? Should I be coming in with a budget for how many runs I need? Should I be coming in with a time frame?
No,
Um,
I think if you're dipping your toes into Steer, I think the nicest thing to do would find a similar pair, ETH WETH, right? There's one here, UCC, USDT, right? These are doing really good. Put something that you feel is comfortable to you, right? And see how it goes for a couple days. If it goes well, then you can feel more comfortable and add some more. But yeah, I would say, do what you think is comfortable and see how it goes. But I would say even with $1, you'll be able to start feeling, how easy was it to deposit? Was it hard to withdraw? Were there delays? Did I have confusion? And if there are, then you can always come to the Discord, and there's a bunch of friendly people there. Love to talk to you from the community.
That sounds awesome. And all of this is purely educational content
Of
for
course.
all of you.
Yeah, of
No
course.
advice
Yes. Not
whatsoever.
financial advice.
But
Not financial
on a
advice.
live stream, we are happy to educate down to the pencil level of how we get into this stuff.
Yep.
Yeah,
It's good to
that's
understand,
great.
it's good to understand the mechanics, right? But we're not saying to go do anything. That's why I said find what's comfortable for you, right? It's not up to us.
Oh, we have our comment here. Does some transaction fees need to be paid for every rebalancing?
Oh, interesting. So you won't see that as a user. That's actually something called a gas vault, and I didn't really talk about it too much, but maybe we'll talk about it for a second. When we were doing the quick mode, there was the amount of runs, right? And that's basically funding what we call is a gas vault. This right now it has a healthy gas vault, 98% health. And we're going to make this more visible in an update, I think probably early next week. But you can see that there's 79 runs actually remaining, and we can actually fund it a little bit more if we'd like. It's very, very cheap on mode, so you'll see that it's like it seems free. This actually is a value; it's probably pennies, but yeah, you won't have to see that. And what one thing you do want to see is like there will be a banner up here if it's low gas, and it might suggest that you might want to top up the gas vault to keep it healthy. But normally these will be healthy.
So if I'm depositing gas in here, I'm basically putting in quarters for everyone in the parking lot in the parking meter. Is that
Yeah,
right?
as well as
It's for
as well
everyone.
as yourself, though, right? Steer
Of
also
course.
funds a lot of these, but yeah, it's for the vault and for the community. I will say, if it's a $683,000 vault, right? Yeah, it's for the community. If you just did quick mode, right, and you hit it up with 100 runs or 25, 50 runs, whatever you did, then that's just for you, and you're just kind of maintaining your own gas there. But what's nice is someone else can come in, right, and add gas. So it might not even be you who adds the gas to keep things going. It could be Steer, it could be whoever. But because we're permissionless, it's a necessity.
Excellent. Love it. Love it. Maybe one of the very future updates, there could be a little chat box on the right where we can, give some roses to the homies that are putting more gas in the
It's
tank.
true. We should do that. We should do that. All right. Coming feature. Upcoming feature.
All the social features. Yes, yes. All right. Well, we're coming up on the top of the hour here. Anything that you have to shill, anything that's coming up, stage is yours to really
Ooh,
go off the cuff here if you need to
yeah.
use the platform.
We have a lot of strategies coming live soon. We have a strategy specifically around meme coins, and working with a couple partners on mode around that. So hopefully that'll be interesting to talk about in a couple weeks. Fluid liquidity strategy mode was the first to get it. So if you're interested on that strategy, it's just came out. It's currently holding $60,000 in TBL. It's doing pretty good. It's IL reduced strategy, and available on Kim. So definitely check that out. And definitely be happy that Mode's the first ones to get it. And Other than that, we have a bunch of reward programs that are running right now across multiple different chains. Mode being one of them. And if you're not following us on Steer, I would go follow us to get access to that. As I mentioned, maybe in the beginning, I can mention it maybe for some of the people who kind of came in. Steer's currently operating on 23 chains. This number will jump quickly in the next couple of days to most likely above 30. And we also work with a lot of different AMMs. For instance, on Mode, we work with Kim, SupSwap, Swap Mode, and Pool Shark. And all of them have concentrated liquidity that needs managed, and we support them with all the same tooling, with the same UI, et cetera. So one thing to think about is following us just to kind of be in tune with when maybe they're running incentive programs, when there's new pools, when they're running maybe some campaigns with us, and get more involved with the community. A lot of people coming to our Discord recently, getting involved. It be a builder, somebody who's just trying to participate. So if you're interested in DeFi or interested in just learning more, please stop by. Everyone's always pretty friendly. And yeah, we have a bunch of stuff coming out, but I don't want to share too much just yet.
It's all good. It's all good. As long as the gas is in the tank and this thing's running, the vaults are active,
The gas is too
we'll
much in the
LP our
tank. Yeah,
way,
yeah, yeah,
LP our
yeah.
way to all
We're
the
growing.
releases.
Yeah, we're growing well, and it wouldn't be without people like you and networks like Mode. So very very happy to be growing alongside you guys.
Of course. Well, thank you so much, Derek, for kicking off our inaugural deep dive series, I should say. Thank you, Fede,
Nice.
for running the gears, and we will definitely catch you in our Discord, your Discord, and keep growing together. And hopefully, everyone found some value. Please hit either of us up if you need any help with navigating or educational material. We're happy to open up opportunities and direct you to the right places. But yeah, thank you so much, and enjoy your upcoming weekend. I know we still have a lot of work to do in the coming days, but um, yes, thank you so much for your hard work.
Awesome. See you guys. Happy Thursday. Bye.